Egypt is preparing for life after the IMF, and the plan it produces will matter well beyond Cairo. The Egyptian government is drafting a new national economic program to replace its current International Monetary Fund arrangement when that deal winds down. Prime Minister has said the plan will be released for public consultation, a notable step toward transparency in a country where economic policymaking has often been handled behind closed doors. To understand why this matters, it helps to know what the IMF relationship has done for Egypt. In recent years, Egypt faced a severe shortage of foreign currency, inflation running at punishing levels, and a pound that had lost much of its value. The IMF program brought fiscal discipline, meaning the government had to tighten its finances and follow a structured reform path. In return, Egypt unlocked additional funding from Gulf partners and was able to tap international bond markets. The fund, in effect, acted as a credibility anchor. When that anchor lifts, the question becomes whether Egypt can hold course on its own. History gives investors reason to watch carefully. Countries that exit IMF programs without a convincing successor plan often see their bond spreads widen. A bond spread is the extra interest rate investors demand above a safe benchmark, like US Treasuries, to hold a riskier country's debt. When spreads rise, borrowing gets more expensive, and fiscal pressure builds. A well-designed domestic program, backed by genuine public engagement, can help close that confidence gap. Egypt's economy has shown some signs of stabilization. The currency devaluation and interest rate increases of recent years brought the pound closer to market rates and helped begin restoring investor confidence. But inflation is still a burden for ordinary households, and youth unemployment remains a deep structural problem, one that short-term stabilization measures alone are unlikely to solve. Any credible post-IMF program will need to address both sides of that equation, keeping inflation in check while laying the groundwork for job creation and sustainable growth. The public consultation element adds a layer of complexity. Broad national conversations about economic reform can build political support and give a program legitimacy, but they also introduce negotiation, competing demands, and the risk of delay. How the government manages that process, what it puts on the table, what it defends, and what it concedes, will shape how seriously markets and multilateral lenders take the final document. The practical signal for anyone tracking emerging market debt: watch the design and timeline of this consultation closely. A vague or delayed program would raise questions about reform continuity. A specific, credible one could reinforce Egypt's standing with the investors it will need to keep borrowing from. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.